If you've been thinking about investing in co-living property in the affordable Victoria market, but you're not really sure where to invest, in this video, I'm going to break down everything you need to know in choosing the perfect location using real supply and demand data, insights from local co-living property managers, and we'll also look into capital growth indicators to maximize not only your cash flow, but also capital gains in the long run. The very first thing that we're going to look at is the supply and demand data from co-living databases. The data sources that we'll be using are flatmates.com.au, and we'll also look at REA Group, which is nothing but realestate.com.au. And the different supply and demand metrics that we have compiled together for this analysis are number of rooms listed in a particular region, number of rooms with ensuite, number of furnished rooms with ensuite. So these three metrics will give us the supply data. And then we'll look at number of flatmates looking for a room. We'll look at number of flatmates competing per room. So it's basically a ratio. We'll look at number of flatmates competing per ensuite room. So that's a ratio again. And then lastly, we'll also look at projected rent per room. So that comes from a local property manager. And the output of this analysis is this little table here, which is gold in my opinion. So on the left, you can see we got all the different regions in Victoria. We got Armstrong, Creek and surrounds. We got Geelong overall. We got Sunbury and surrounds, the area that's closer to airport. We got Craigieburn and surrounds. We got Ballarat, Cranbourne, Fraser Rise, Tarneit, Melton. So these are the different areas where we could build a co-living home. And now we have compiled these key metrics against it. So we can see number of rooms listed in different regions. We can see number of rooms with ensuite listed in different regions. And the good insight that I could get here is only 10% of the rooms in the marketplace have an attached bathroom. So that's a pretty good, strong indicator that there's not much options available for people out there looking for rooms, because everyone wants attached bathroom. I haven't seen any roommate or flatmates wanting to rent a room without a bathroom. No one wants to share it. Okay, and then we are also looking at the demand side, number of flatmates looking for property in that region as of today. Now, these supply and demand matrix can help us derive these two decision-making metrics. So the very first one is flatmates by rooms ratio. So that means number of flatmates competing per room in that region. And the second matrix is the most important one. That is number of flatmates competing per room with ensuite. Let's look at the first one here. So you can see in Geelong, we have 2 people competing for a room, which is pretty good. We got Sunbury, Craigieburn, Ballarat, all these other areas. There's actually 1 room available and 1 person looking for it. So the supply and demand is quite balanced. And the Tarneit and Melton, there's like more people than the number of rooms. So this is not a great market. But if you look at this matrix, it says number of flatmates per room. But what we want to look at is number of flatmate per ensuite, because everyone wants their own bathroom. So the moment we flip the switch and start looking at this matrix, the numbers look so much imbalanced. So you can see there's 47 people looking for a room with ensuite in Armstrong and surrounds. There's 26 in overall Geelong. Sunbury is not bad either. Craigieburn, pretty good. Ballarat is pretty good. Everything is pretty good except for Tarneit and Melton. So if you look at this particular matrix, this is the single most important thing, because when you're building a co-living, every room will have an attached bathroom. So this matrix is the decision-making matrix. And by the look of it, we can tell straight away Geelong is the untapped market for rooming. Totally undersupplied market. There's literally no rooms available with ensuite. But there's so many people looking for a room already. Now, Sunbury and Southeast Melbourne is a great option too. So it's a pretty healthy market. So if you build there, you should be able to find tenants very easily. Although Sunbury, we don't have much of data. So I'm not going to confidently say you should build in the north, but Southeast is pretty stable, very statistically significant data over here. Now, the surprising thing over here is the Melton and Tarneit sits at the bottom of the list, but still the occupancy rate in this area is 95% as per the local property manager. And the reason for that is because even though it's the bottom of the list, but look at the supply and demand. There is still 4 people in Tarneit looking for a room with ensuite, right? So overall, if you look at it, there's more demand than supply still. So the occupancy rate is not a problem at all. But we don't want to be doing in these areas. And the only reason for that is most investor groups are heavily marketing in Melton and Thane due to price point. Investors love cheap stuff. They love the price point that these areas offer. Marketing companies love it because, they can sell these areas better, and that can result in oversupply. So for this reason, we will say do not invest in West, but do your own due diligence. This is just to help you make a better, well-informed decision. Now, what we've looked at is the statistic side of things, so supply and demand in different regions. What I'm going to show you next is the local insights that we've gathered by talking to local property managers who manages these property day in, day out. The insights that we have gotten from them: number one, product is more important than location. If you have a purpose-built home where every room has attached bathroom, separate aircon, and lock for privacy, we can find tenants, doesn't matter where you build. So you can see the property manager is focusing more on the product than the location. And the reason for that is, if you've seen in the previous chart, there is more people looking for rooms than the number of rooms available. So if you build the right product, then finding tenants anywhere is not a problem. But then I went on to ask the agent, hey, we need locations. Tell us the location where we should be building. And that brings us to insight number 2, where they're talking about every little location in Victoria. So Southeast Melbourne is very successful due to infrastructure, employment hubs, universities, and transport links. Very easy to find tenants there, which is no-brainer. Southeast looks pretty good in terms of data as well. Sunbury and surrounds have been quite decent due to proximity to airport. They sound pretty confident, but the data is not significant, so I'm not 100% sure if this will be accurate. Now, third is Geelong is undersupplied or underserved market. It's so big that barely any purpose-built homes available there. Very easy to find tenants, which I've showed you in the previous slide. It absolutely aligns to this comment. Ballarat is neutral. Rents aren't that high, but occupancy is pretty solid. But overall, it's a pretty neutral location. Pretty good, actually, not neutral. Melbourne West is a bit tricky one, as it takes longer to have tenants. Thane is better than Melton for sure. Okay, so West is a tricky one. Obviously, we saw the data as well. It is a tricky one, so let's stay away. Now, my key takeaways from rentability perspective: I'm super comfortable with Southeast Melbourne, Craigieburn, Clyde, North Clyde, these sort of areas. You can be very confidently build in these areas. You will have tenants. There won't be oversupply from investors because these are expensive areas and investors don't like it. But obviously, smart investors like you should follow that. Second, North sounds okay, but there's lack of evidence because of demographic size is too small. So I'm not very confident about North just yet. Geelong is a gem, both from data and manager's perspective. I'm personally thinking about investing in Geelong as well and build a co-living house. I'm very bullish about this area. Ballarat is okay if affordability is important to you. So it's a pretty good spot, but then it's affordable, but also rents are lower. Melton is a no-go. Thane is okay, but there's a huge risk of oversupply due to huge investment companies focusing in the West. So what we have looked at so far is the rentability of different regions. Now, what we will look at is the capital growth indicators of different regions. Actually, I'm just going to cover Geelong in this video, but if you want other locations, feel free to comment in this video and I should be able to cover that in the next video. So let's look at capital growth indicators for Geelong. This is the growth rate cycle of Geelong. So you can see Geelong growth rate have been running in 2 to 3 years cycle. So you can see there's like a 2 years of growth, and Geelong reached like 20% growth a year and then kind of corrected a little bit up to 10% and then did a little bit of growth cycle and then a little bit of quarter cycle, explosive growth cycle, then a little bit of correction, not really correction, but pretty still over zero, and then a bit of growth cycle, and then this is a bit of correction that we are going through right now. So if you put a regression model to this, or even if you look at from your naked eyes and see the pattern, we are somewhere over here in 2024, 2025, which does look like bottom of the market if you see this pattern. If you buy in Geelong now, you could be buying well below the market value. You can capitalize on the next boom cycle and you get the entirety of boom period as your capital growth, so which looks pretty positive. Geelong's affordability index. So obviously affordability is the single most important factor for long-term capital growth. If the properties are not affordable, then obviously there's a ceiling. The market cannot keep rising. You can see the affordability index is basically how many years it takes for Geelong residents to pay off their home. And you can see it's 42 years right now. 42 years do sound drastic, but this includes the entirety of Geelong. So people in low-income earners, high-income earners, but not everyone in Geelong can afford a home. And also this is based on the 6.5% interest rate assessment. So as interest rate goes down, affordability goes down as well. Now, people think, 42 years is still such a drastic affordability index. But if you compare that to Sydney, in Sydney, it takes 80 years to pay off your loan to average people. So now all of a sudden, Geelong looks pretty okay. Now, obviously, that's Geelong, but we will not be investing in the Geelong market overall. We will pick certain suburbs. So if you look at one of the suburbs that is our focus area right now is Armstrong Creek. So the affordability index is actually less than 30 years. It's actually 28 years. So even if price is double, people should be able to afford the properties here. And imagine interest rate going down and then affordability will go down drastically. So affordability-wise, Geelong is looking pretty sweet. This is the Geelong's vacancy rate. So you can see vacancy rate is nicely tucked under 3%, which is pretty good. And more recently, it has been declining, which represents a good market for investors that, there's a bit of rental growth that can come with low vacancy rate. We have on screen now the stock on market and inventory. So this is the supply side. So you can see the stock on market has been declining steadily. The inventory basically means number of months of inventory available in the marketplace. So you can see it's sitting just over 1%. Or even if you average out, it's still less than 1.5%. So which is pretty good. So there's no huge oversupply in the marketplace, which is what we like. And then obviously the supply side, we'll look at building approvals. So building approvals have been trending down. Look, realistically, building approvals are very, very low compared to the need for Geelong. And this is not looking pretty good for housing perspective, but as an investor, this trend looks pretty solid. Also, the hold period, so how long people hold on to their property, has been increasing drastically. A few years ago, it was like 6 years, and now it's 9 years. So that represents there's a good lifestyle factor in Geelong. People hold on to that property for longer, and that means there won't be much volatility in the market and kind of helps with, supply and demand side of equation as well. Next thing is population growth. Obviously, Geelong is Victoria's fastest growing region. So right now, population is like 250,000, something like that. And it is going to be close to 500,000 people in next 20 to 25 years. Just imagine that population doubling in 25 years. Wow. So that's a pretty good story for population. Now, we also consider employment rate. So unemployment rate is lower than Victoria, lower than Australia. Very nice job market. Economy is doing pretty good. And that's what we like. We don't want to be investing in regions where there's no jobs. Also, this is the industry diversity. So you can see it's not reliant on one industry. There's healthcare, which is pretty good because that's very good demographic for co-living properties. Healthcare is 17% employer, construction 10%, retail, education. So you can see it's nicely diversified across different service-based economies and industries, which is very good and not heavily reliant on mining. Okay, these were all the statistical side of things, but we want to also look at qualitative side of things, so something that is more emotional. So Geelong is second largest city in Victoria. Obviously, it's not a small town. It's the second largest. Look how beautiful the city is. I just love this place. I've been there last year and it was just amazing. Also, it is second largest regional city in Australia. So it's not a tiny little village. It is like a proper city. You can very much say that. It is home city of Avalon Airport, which is Melbourne's second largest airport. And it's a very busy one as well. It's not one of those, calm and quiet airport. It's actually quite busy and most of the airlines operate there. so which is another positive factor. Geelong is coastal, water, beaches, tourist spots, and has that happy vibe, so it has everything that human being needs. It is important. Also, everybody knows about Geelong now, especially after COVID. Like, everyone knows where Geelong is. Before, it was like, I don't know. I know people used to not take it seriously, but now every news article, every media, every research report covers Geelong. And also you can see the trends in real estate, search trends, and Google trends where Geelong searches have been increasing steadily, which is a good indicator. Also, Geelong has that lifestyle factor that attracts. We spoke about beaches, wineries, nice thriving city, nice economy, jobs, and infrastructure spending. All of this contributes to a very good lifestyle that families and people love there, which is a good indicator again. Now, my final conclusion about Geelong, look, Geelong won't see that great short-term growth because of what's happening in the overall Victoria market. But Geelong can be or will be one of the top performing cities in the 5 to 10 years window. And if you're thinking about long-term investing, then Geelong is a very good opportunity right now, both from rentability and capital growth perspective. So that's it from me. And if you like this video, just smash that subscribe button so that you'll be notified if I put a new video on the same channel. Until then, happy researching, happy investing.